margins is the focus, and there are levers like consulting orders, which are high margin, 15-20% kind of margins, which can provide some fillip. Stocks have done exceedingly well. IRCON has done well, RVNL has done well, IRFC, and so many others in that space. On to our special segment, Charting Trends now. Rahul Sharma is Head of Technicals and Derivatives Research at JM Financial Services. He's with us here in the studios. Rahul, great to have you with us here. Thanks very much. New highs on the Nifty, so I guess one has to start with that. How do you kind of project higher levels once the index is at higher levels, and how is it looking for the Nifty from here?
Yeah, first of all, thanks for having me. This is my debut in your studio, so feels good to meet each one of you in person. Coming to, at 18,600, the risk reward definitely is not in favor of large caps as we speak. And incrementally, what has happened is the risk reward in the laggards. So first we saw the Bank Nifty hitting life highs, followed by Nifty. I think the pockets of the market where there is a lot of catch up to be done, one is the mid cap space, another is the small cap space. So I think that becomes more attractive, more lucrative at lifetime high levels. Yes, markets may continue to do good from here, but as far as the big money is concerned, I think that is where the alpha can be generated in the near to medium term.
That is mid caps and
definitely mid and small caps. So if we talk of numbers, the mid cap 100 index is approximately 6% away from lifetime highs. The small cap index is around 8 to 9% away from lifetime highs. So just a catch-up rally. Historically, these indices have outperformed the markets in bull phases. Yeah. So even if we have to play catch-up, so first the catch-up and then the outperformance. So that can, simply translate into anywhere from 20-25% return in the next few months down the line.
Okay. All right. Hi, Rahul. Good morning and good to meet you in person as well. I think you got that bang on, right, with regard to the client versus FI positioning. And you said you're going with the clients. They have got it right, and bang on, it did play out. My question to you is on the index itself. Do you believe that 19,000 is on the cards for the December series? Is that a possibility? But you look to get in on a dip. What's the entry point?
Yeah, so, there was a point in time where FIs were heavily short on the market, and retail, just got it right. It has been the norm since last 12 months now. Yesterday was the first time when, retail went short on the index versus FIs, which are still long. So what is happening is essentially, the retail is losing interest in the large caps or, vis-a-vis, the broader market. So what is now happening is there is a good chance that Nifty continues to do well because nobody is really short on the market. There's no heavy shorts in the system. So we've seen this low IV. Nobody majorly short or long on the market. Historically, last year July 21, markets went nowhere. So I think this is one of those phases where we may see subtle movements. Not big gap ups, gap downs. Markets may just consolidate with a positive bias. So yes, 19,000 is very much on the card, but it's just that it may not happen with the same gusto and energy that we saw in the first leg of this rally.
Okay, can you give us some sectoral flavor? Where is it that you think leadership could come through? Money is chasing with sectors and stocks.
Yeah, so you have to look at it from technically speaking. If you're chasing momentum, I think it has to be the PSE pack. Public sector enterprises. This is one index which is at decadal breakouts. The returns could be anywhere, from 20 to 25% in the next 6 months or so. So it is at a cusp of a big breakout. If you are looking for reversal play, I think small caps and mid caps are one sector that can do well. I think in the banking pack, there is a shift that is happening. PSU banks have done their bit. I think it's a good time to take profits and move to private banks. Private banks historically have led the banking pack. I think that ratio between private to PSU is about to tilt.
Yeah, no, let's just have that graphic up which we put out. The story of sectors. I think Rahul, you send this and just explain what you want to say. Are you? That's the one. You can see it on the screen. Are you talking about the rotation from one sector to the other? I mean, different sectors doing well in different phases, different time periods. Just talk to us about this.
Yeah, absolutely. So, looking at this graph, it is the red line that you can see right at the bottom is the IT index.
Okay.
So, from a headroom perspective, IT is one space which can deliver, the maximum potential returns if you are an investor.
Okay.
The yellow line is the one which is the pharma, which has been a laggard. So these are, primarily the only two components in the Nifty 50 space which have, properly underperformed the Nifty. And these two comprise of, so IT is around 10%, 6% is from the pharma, so around 16% of Nifty is underperforming. Out of the rest of the pack, I think the gray line, which is right at the top, is the PSC. So if you are a momentum chaser, and plus this is coming out from decadal, underperformance. So this is where, the big momentum guys can, cash in and, make big money. In between, you have the small caps and the mid caps. So, if you have like a 3-month perspective, mid and small cap should be the flavor of the town.
Yeah.
And if you have like a, slightly, bigger money, bigger time frame perspective, PSC is one sector to play with.
Well, Rahul, the sense you're giving us is the broader markets, maybe there's a bit of a catch-up that's due. So let's get to a couple of stocks then. Which are the ones that are looking good, and what kind of allocation would you give them from the broader markets?
Yeah, so in fact, we have, identified a list of stocks, especially from the large cap space, which, mid cap space, which can be, bought at these levels. 5 names, of the best setups. One is Aditya Birla Fashion Retail. This stock was, a very good performer in this calendar year. This correction, recent correction, which has come off from 350 odd levels to 300 odd, makes it, very attractive at these prices. Then from the, PSU pack, which is, the flavor of the, market as of now, Concord looks like a very formidable bet at these levels. You have Poonawalla FinCorp from the NBFC space, which is also poised well. And, from the castings and forging business, Bharat Forge is something that is coming out of multi-month consolidation. So this stock has another, possibly another 20% upside from these levels. And because IT has so much of headroom, why not have a mid-cap IT stock as well? So Coforge remains our top pick from the mid-cap IT space. So looking at the basket, we are looking at an upside of anywhere from 20 to 25% in the next 3 to 4 months. These stocks can deliver that kind of a return. And, you could have a portfolio level stop loss at maybe 10% of the total, investment value. And we feel that, 6% catch up of mid-cap index to previous life highs should easily translate to at least 10 to 12% return on these stocks. And from there on, I think, these stocks should take off. There is cold money and there is hot money. I think this is the time where hot money will come back into these stocks. And, we'll see those frenzied return that we've, seen in the past come back to these kind of stocks.
These are stocks which are off their earlier highs, right? So this is not, so you're not buying newer highs when you say that these are the five of your picks. So you're looking for turns, basically, turns higher, longer term setups, etc. But you're not chasing momentum here. At least not right now, with these names.
Yeah, so absolutely, because the mid-cap index has been an underperformer, it's, most of the stocks are actually reversal candidates than, momentum chasers. So even if they have to, attain their previous size at a good amount of, headroom on the upside, the second basket, which looks even more attractive in terms of, percentage returns, is the small cap basket. So small cap 100 index, a small cap 250 index is like 9% away from his previous lifetime highs. Some of the names, for example, sugar is on the verge of a big reversal. Balrampur Chini remains our top pick from the sugar space. 7 months of underperformance now, getting converted into a big reversal. Yes. Then you have Angel One. So obviously markets at all-time high. Our industry is something that will benefit from larger volumes and greater market share. So Angel One is another setup which looks very good. From the defense space, Bharat Dynamics, we've been recommending this stock since many months now. This continues to be our top pick in the small cap space. So Bharat Dynamics looks good for another 20% upside from these levels. And because private banks are doing well, I think City Union Bank is one small cap bank which can deliver a punch from here. So we are looking at approximately a 25 to 30% upside in City Union Bank from these levels. And because it is winter, because we've seen tourism at its peak, Delta Corp is one stock which can see formidable upside from these levels. So this basket is looking even more attractive. Possibly a 30 to 35% return is possible in this basket. And the reason why we only chosen 5 stocks is we want concentration to to be at play here. So top 5 mid caps, top 5 small caps, and I think this is one meaty part of the market which can pack a punch in the coming 3 to 4 months.
Rahul, thank you very much for joining in. Pleasure chatting with you in the studio. Look forward to more such interactions. We'll slip into a very short break on that note. On the other side, we'll